Hello and welcome to The Chatter. Today we are talking about the likelihood of a recession, in particular, what's going on in the retail market. And to help me discuss this, I sit down with Jharonne Martis, Director of Consumer Research at LSEG. Jharonne, an old friend of the show, welcome back to The Chatter.
It's great to be here.
Thank you. So we've been talking about the resilience of the 2023 corporate profits, but what I really want to talk to you about today is the US consumer. So I'd like to start with going back about 6 months and talking about what the kind of behavior was of the US consumer then, where are we today, particularly in light of the Black Friday sales, and kind of the outlook into the future for the US consumer.
So it's interesting because the Refinitiv consumer confidence has been telling us that the consumer has been feeling very secure in their job. And this is the reason why they spent most throughout the year. However, November marked the first month where we saw the employment rate start to decline. And it's also the first month where we saw a lot of corporate America warning us about the layoffs, like in companies such as Meta in the tech industry. So if consumers start feeling that their inner circle and they start seeing that their friends and their families are in danger or start losing their jobs, that's when we are in danger of seeing the consumer pulling back and putting their hands in their pockets and even hold back on spending. As you know, the consumer makes about 2/3 of the US economy. Now, having said that, they have spent freely for most of the year, but they have spent most of their money in travel, hotels, and leisure. When you look at the US government retail sales for the United States, a lot of that money has been going towards restaurants and bars. And this is mainly because the consumer, after 2 years of being cooped up at home, is now ready and willing and wants to be out and have experiences. We've even called the travel this year revenge travel because they're out again, and no matter how high those travel tickets are going up, consumers are still going to go through with those traveling, and they want to see their families for the holiday season. So that's where the consumer is spending their money.
Okay, so I think there was a few things to unpack there. First of all, the relationship between unemployment and consumer spending. Clearly for you, it's a very important one. I think the recent tick up was to 3.75%, is that right?
Correct.
So when do we start to see alarm bells? Like, is there a number at which point the consumer says, I'm actually going to really start holding back because I can see that the unemployment rate is getting too high?
Well, that's the one economic indicator that consumers understand very well. So it's more about like how much it will go up on the next month, right? If it's just a slight uptick, we might not see a significant pullback on the consumer. But if that number increases significantly, expect the consumer to change in their behavior and pull back on spending. Now, having said that, the threshold is a 5%. That tends to be the mark where the unemployment starts to go into the red flag.
So we were talking earlier and you said that actually there's also an anecdotal aspect to all of this. This is if you know somebody who's lost their job, then that does impact you. You don't need to see it in the numbers just yet. Is that's something that's true?
Correct. Because of the pandemic, we're all very much connected. We have friends all over the world and we talk to them every day. So it just matters, like if you know somebody, if the consumer knows somebody, they're based in New York, but they know somebody in San Francisco that lost their job, if they start seeing that their inner circle starts to lose their job or is in fear of losing their job, they're going to feel that fear as well. And that does translate into the consumer confidence. We see that in the job index. Then we're going to start to see them pull back on spending.
It's very interesting that the pandemic has had this perhaps change that we're more sensitive to what other people's lives because we're just more connected than we were before.
Yes.
So moving on to the particular sectors, if Jharonne, I could ask you questions on that. Yes. I think you were saying some interesting statistic about there's only one sector which is looking positive for the fourth quarter, but can you talk about the different sectors and how we're seeing consumer spending go throughout the sectors?
Well, the strongest is always happens to be the restaurant, lodging, and hotels. That has been the strongest sector for most of 2022, and that is still projected to be the strongest in the fourth quarter. Now, what's crazy is that 10 out of the 11 consumer sectors are turning negative, and only one is expected to be positive, and that is, again, the restaurant and hotels and leisure sector, which is expected to grow to almost 250%, and everybody else is expected to be negative. And this is mainly because consumer wants experiences over things. They're not buying items, which is why we're seeing that the retailers have been stuck with high inventory levels because consumers have been pulling back on discretionary items, on apparel. They're not buying any more clothing. They have a closet full of shoes and clothes, but instead they are gravitating towards experiences. Still, having said this, when the consumer does open up their wallet, they're also going towards the beauty sector. That's another sector that we've seen some strength because with the reopening and traveling and going back to the office, they still want to look good. So when we look at projections, one company that Refinitiv tends to be bullish on happens to be Ulta Beauty. The analysts polled by Starmind do believe that that is a company that is likely to not only beat earnings estimates, but post a positive surprise.
Now, looking at retailers in particular, we were chatting a little beforehand about the average kind of discounts that you can expect from retailers. And do you want to just say a little bit about previously what kind of discounts we did expect and where people are now?
So in a collaboration with StyleSage, Refinitiv discovered that going into the Black Friday holiday season, the discount penetration, which is the amount of merchandise on sale, has gone up significantly. It's the strongest we've seen all year around in 2022, and it's back to the pre-pandemic levels. So yes. So about 42% of all online retailers, of all online merchandise for US retailers is on sale. And that is back to the pre-pandemic levels where we saw a lot of the merchandise on sale. Still, what is different though is that the average discount that the retailers are offering the consumer. So back in the day, if you got at least a 40% discount, you knew you were getting a good discount. This year, however, that average discount is lower at 37%, telling us that more merchandise is on sale, but the average discount is less. This is mainly because retailers are very much concerned about gross margins. They've been sitting on a lot of inventory. Yes, a lot of them have slashed them going into the fourth quarter, but they're still very much concerned. Even when we look at the merchandise that is on sale, the highest discount amount, the category that was highest on sale is shorts. So off-season merchandise, shorts and skirts and even swimwear, because retailers are trying to move and get rid of that inventory ahead of 2023. So the danger then becomes like, how much and for how long will these discounts last, right? Because in order to not to hurt gross margins, and also the effect that we're having with the unemployment rate and the consumer holding back on spending, right? Because if this continues to be a trend going into 2023, then we're going into dangerous levels, which is like really where the consumer starts to pull back. They don't open up their wallets unless they see a promotion and a discount. Retailers are then stuck again, compromising their margins while trying to move that inventory. So that's the situation we don't want to be in going in 2023.
And is it too soon to get any read on how Black Friday sales went?
So the early reads suggest that consumers did go out more than the last 2 years when they were cooped up during pandemic, but it's still not back at pre-pandemic levels. Okay. And also the difference is that the pandemic changed how Black Friday is. It used to be like retailers would offer early discounts, door promotions, doorbuster promotions in order to bring in a big crowd into the stores early in the mornings. You can't do that during a pandemic. You have to have, the COVID world only allows us to have a limited amount of people within the store. So as a result, we're seeing that the discounts have been spread out during a longer period of time, and they've moved a lot online where you can just shop from the convenience at your house as opposed to going inside of the store with other people. So it's changed the game. And because of that, we're also seeing that consumers are taking their time. And this is not the end of the promotions as we used to see during previous years where the promotions were only around Black Friday. Expect to continue to see a lot more promotions going into the holiday season, especially given the fact that retailers are trying to move that inventory.
So Christmas will be interesting as this, we need to keep an eye on this unemployment rate.
Right.
So let's look forward a bit, if we can, Jharonne. So what do you read from the outlooks we had from retailers in Q3, and what are your own predictions about the US consumer?
So the key indicator is really going to be the unemployment number. That's going to be the one that's going to break or make, that's going to be the telling indicator.
How the US consumer behaves next year.
Exactly. And to the extent the US economy. Right. That's the only one that matters. Because we had such a strong market this year, the strong labor market, that's why the consumer remained engaged in 2022. However, that might be a different picture given that unemployment number. Having said that, the consumer right now, the number one worry on their mind is inflation, even more so than COVID. That's what the consumer confidence data tells us. So despite the heat of inflation, they are still spending, but they're spending towards experiences, not so much towards things. And we're seeing that there's a lot of promotion to entice that consumer to open up their wallet. So how much retailers are successful in getting rid of that inventory will also determine their success of 2023 if they enter with leaner inventories.
Is there a reason to be a bit cautious on the hospitality sector then? I mean, some of these numbers just sound too good to be true, and I'm not sure they can sort of keep going at this kind of pace, can they?
Well, they have for 2022. It's crazy the amount that they have been the biggest winners, and those are still projected to be the biggest winners, at least the holiday season and beginning the first half of 2023. Right. You know, it's been a changing environment given everything that's happened with the pandemic, but for the most part, people after being cooped up, they just want to live life. And that is translated into the numbers. They want to be out with their friends. They want to go out and eat at bars and restaurants, and we're seeing that.
Well, Jharonne, it's always such a pleasure chatting with you. Thank you so much. I mean, we don't give recommendations on this show, but it sounds like buying swimming trunks right now might be a good time to buy.
Beauty, Ulta Beauty. That's the one that StarMind suggests might beat earnings estimates. Yes.
All right, Jharonne. Well, thank you so much for your time. As ever, it's great to have you.
Thanks for having me.